All right, for all you futures traders out there, we're starting the week off with a bang, right? This is the S&P 500 E-minis from today, and here's the Dow futures from today. And in this video, I'm going to show you how at exactly 9 a.m. today, using the dyno charts, okay, we nailed the exact starting point of the trend for a sweet trade to the upside without using any indicators at all. All right, let's do this. All right, what's up, guys? It's Mark here at DynoTrading.com, the world's #1 resource in the world on where we show traders how to trade without any indicators at all. And when it comes to futures trading, a lot of customers ask me what I prefer. Do I like the Dow futures or do I like the S&P E-minis? And the answer is that it kind of depends. I mean, first of all, there's nothing wrong with watching both markets, right? So if you trade futures and you plan to establish a consistent trading game plan over the next X amount of years, right, then ideally you want to be watching all the volatile markets, right? I happen to really like the Dow futures. I think the S&P 500 is a close second or third. And of course, the NQ futures, which is right over here, is also pretty good. But again, at the end of the day, trading is discretionary. Everybody is free to choose the market that they like. And, I've always said on my channel that the Dow futures is one of the nicest, most trending markets in the world. I don't think you're going to find anything else like it in terms of how steady it is, how reliable it is, and of course the huge potential profits that you can grab on the Dow futures. All right, I look at futures trading as, listen, this is not a beautiful woman that we're looking to get married to any one instrument, right? There's no reason to be obsessed with the S&P 500 E-minis. There's no reason to be obsessed with the NQ. At the end of the day, we're looking to make money. We're looking to trade trending markets. And while the Dow futures does trend very nicely, I don't think there's anything wrong with watching the S&P 500 E-minis, watching the NQ, right? Watching gold, watching oil futures, watching the E-mini currency futures. I mean, there's many different ways to make money in the futures markets if you have the right type of proprietary and professional day trading charts like this. All right, so anyway, let's get to the good stuff. All right, let's get to why you're watching this video. Well, I believe in a strategy called retracement trading. All right, for those of you guys that are brand new to the channel or brand new to trend trading, you're going to find this to be an incredibly powerful approach to your trading, okay? And for those of you guys that already know what's coming next, well, let's just get into it. So there were actually two pretty decent signals in the morning session today. So here was a short signal and here was a long signal, right? And just a refresher as to what these two signals are or how they're generated. Well, a short signal is simply the first red bar after any string of green, and a long signal is simply the first green bar after any string of red, right? Nothing complicated about that. But when it comes to physically taking a trade, like I said a few moments ago, I like to wait for the retracement, all right? And in order to identify a retracement, you have to be able to draw a retracement zone, which in this case, it is ultra simple, all right? All we're doing is we're taking the high and low of the signal bar, all right? In this case, this is the short signal bar, and right over here on this long signal bar, we're doing the exact same thing. We're taking the high and the low, and what do we do with this information? Well, we want to pop it into a smaller time frame chart. In fact, I should probably label this. I keep forgetting to do that. Let me go ahead and label this here. This is the T-bars chart, okay? This is the smaller time frame chart, what I call the micro chart. And, my entire approach, guys, is using a higher time frame chart to get the direction right, okay? Because I firmly believe that if you can get the direction right, you've done 95% of what you need to do to spot a good trade, okay? And as a reminder, we don't use any indicators at all. Forget about MACD, forget about stochastics, forget about moving average lines, all that other garbage. Leave that for the retail traders, all right? Because I'm going to show you a ridiculously simple way to get into this trade right here. All right, so what I'm going to do right now is a little video magic, and I'm going to pop in this zone here and this zone over here into the smaller chart just like this. All right, so if you don't know how to do that, guys, just check out the video I posted last week. There's a quick and easy way inside NinjaTrader to pop in the zones into the micro chart. All right, so check this out, guys. I'm going to show you something awesome right now. All right, we're going to take a look at two different use cases. One is, well, what do you do when you don't get a retracement into the zone, right? This was the short retracement zone. And as you can clearly see, price did not come back and give us an opportunity to short this market here. The market was so strong, it just dropped like a stone to the downside. And listen, guys, that's going to happen, right? The market's going to do whatever it's going to do. Sometimes you don't get an opportunity. But what about over here, right? What do you do when the market does come back into the retracement zone? Well, let's zoom in here and check this out. All right, stretch this out a little bit here so we can really see where the pivot points are. Okay, so before I draw these pivot points, let me walk you through what we're doing right now. Okay, on the Dino bar chart, we get this green bar, right? We drew our zones, and that's what this two set of lines represents, the retracement zone. And what we're doing is we're waiting for price to come back into the zone where all the smart money's waiting, which you can see happens right over there, right? And we want to try to figure out how to take on a low risk entry within the context of a bullish long signal, right? That's why I put on here, nailed the long signal. Green means you're a buyer. So if we jump back over to the T-bar chart, then you guys know how to draw these pivot points. These pivot points are simply every reversal bar's high. All right. And for those of you that don't know much about trend lines, first of all, I can promise you that trend lines and the ability to draw a trend line the correct way, all right, that's the holy grail of trading. I'm not even joking about that. All right, so how you draw a bullish trend line is you wait for two falling pivot points and you connect them in this fashion, what I call a downward sloping trend line, because you're waiting for price to smash above, right? So check this out right here. Price is inside the zone, but we don't get any sequence of falling dots just yet. Right? These are rising pivot points. We're not able to draw a trend line in this fashion, right? But check this out over here, right? The market came back into the zone a second time, and right over here at exactly 9 o'clock in the morning, okay, it meets our setup, right? Where we have two falling pivot point dots. So what do, guys? We connect these two falling dots with the trend line just like that, and the trade gets filled right over here. Our stop gets placed one tick below the swing low, right? So far so good. There is nothing that I think is super complicated about what I just outlined for you here. If there is, guys, please let me know exactly which of these concepts you're struggling with, and I'm happy to do another demo for you one-on-one, all right? But I think most of you get it, right? I think most of you get how easy and simple, and more importantly, how powerful a trend line can actually be to forecast incredibly powerful moves in the market, all right? So if I squish this in here, all right, bring this down a little bit, I mean, you can see where this thing ends up going, right? We got in all the way over here, which was within the context of the retracement zone, right? We got in all the way over here, and the market did nothing but go straight up, right? And everything that I just showed you in the T-bar chart happened in this section here for a massive, massive gain in the morning session, right? I'm talking about wrapping up your trading by lunchtime, okay? And same thing on the S&P, same thing on the NQ, right? It's, guys, these are the same patterns day in, day out, week after week, month after month. This has been an incredible year, guys, to day trade futures and Forex and stocks. If you've been sitting on the sidelines, then listen, man, enough is enough. It's time to get in the game, These moves are crazy, and just like we see massive uptrends in the market, you know that we're also probably going to see massive sell-offs in the market. And these proprietary charts are absolutely incredible at helping you nail the starting point of a trend before the trend actually starts. Makes sense? Hey, listen, guys, thanks for watching this video. If you found it informative, please do me a personal favor and like this video, subscribe to this video. If you have any questions on these dyno charts, please do not hesitate to get in touch. Hope you had an awesome trading day today, guys, and I'll see you on the next trade.